The U.S. economy experienced its sharpest contraction in 7 years. In the third quarter, gross domestic product fell by 0.3%. And there was more bad news as fears about the financial crisis and continuing job losses triggered a drop in consumer spending during the same period, the first drop in about 2 decades. Business investment also declined. The White House downplayed the news about the GDP. Edward Lazier is chief White House economist.
So there's no question that these numbers tell us that the economy has weakened and weakened substantially. We knew that. It wasn't unexpected. In fact, the numbers came out slightly above expectations. But again, I think the general picture is that the economy has slowed.
Wall Street economists had predicted worse, a 0.5% drop in GDP. In New York, the Dow Jones Industrial Average closed almost 200 points higher. But analysts say stock markets are likely to remain volatile as the country makes its way through tough economic times. Earlier this week, the Federal Reserve Bank cut interest rates for the second time in a month in a bid to stimulate the economy. In the meantime, many retailers and consumer-oriented businesses are braced for what could be further bad news in November and December, the traditional holiday season. That's when they have the biggest chance of offsetting their losses from the rest of the year. Robert Raffaele, VOA News.